So I'm here with Marco Iampieri from Ontario, tax lawyer, and I'm pretty excited here for this one. For anyone who's new to the group or you don't know who I am, my name is Doug Collins. I'm the host around here, but I'm excited to start this interview series off. I did an interview series last fall. It was 8 or 9 different interviews, but mostly people in a home-based business who are getting tax benefits of all these write-offs. But now I kind of want to flip it a little bit and bring in some expertise and outside experience like Marco here, and really talk about, why we should be doing this, why we should be living by this message of more people should have a home-based business, and here's why. So today we're going to hear from a tax lawyer. I wrote this book, The Home-Based Business Guide to Write Off Almost Anything, and I wrote it as an easy read. This isn't a tax law book. I've actually been beaten up a little bit by some people, but it's, a lot of people like it because it takes it from an entrepreneurial perspective of understanding taxes, understanding the write-offs, and why we should start the journey of learning more and more about this and becoming more self-empowered, which is the reason why, I'm excited to bring Marco in here as a tax lawyer because, he comes with a different bench strength than I do. I've been doing this for 20 years. Learning it and understanding it. We've got somebody in here who's educated that can speak to it from a different perspective. So super excited. A couple more interviews we've got coming up. Our tax preparers, one in Canada, one in the US here in this group. But for today, I want to talk tax law. So Marco, why don't you introduce yourself? Tell us a little bit about, why tax law. It's probably not the most sexiest thing in the world, but criminal law, family law, there's all kinds of areas you could have went to. But why tax law? And let's just tell us a little bit about yourself.
Absolutely. And first of all, thank you, Doug, for organizing this. It's my pleasure to be here, and it's my pleasure to share this information. A little bit about myself is I grew up in Toronto, Ontario, and I didn't know too many lawyers growing up. And when I went into law school, I envisioned being a criminal lawyer. I worked in criminal law a little bit, and I didn't really like it too much. And I didn't meet any tax lawyers. And I would hear about people that have all of these tax problems with the CRA, and that really affect them financially, emotionally, and terribly. And, I see my role as alleviating that pressure and being a shield and an advisor to those having tax problems or tax opportunities. I specialize in tax litigation, and I focus on that. That's my focus. And I defend people from CRA audits, and I defend individuals and businesses at internal appeals, and I defend them at the Tax Court of Canada. A little bit about myself. Why do I love tax law? Well, I love tax law because it allows me to help on a great level. People dealing with the CRA, it's a very unfair advantage a lot of the times because they don't know the rules that are underlying the game. And, the legal system and dealing with the CRA does have many rules. And if you don't understand them, it's very difficult to represent yourself in the best light. Starting out as a practitioner, I run my own business and I practice exclusively tax law and business law. So I can answer many of these questions. And a lot of the times, if people are have many deductions and money write-offs on their business income, then they need to be organized. And being organized is key to survive any audits. So let me try to go through these questions one by one. I've answered what I do in my tax law practice, and I also do some planning and estate planning in order to dispose of assets at the most cost-efficient basis to reduce probate taxes and various deemed dispositions at death that increase your tax bill here in Canada. Some clarity about who establishes tax law and the interpretation of tax law. Okay, so I can talk about that. So in Canada, we have, which is entirely different from the United States. So everything is from a Canadian tax lawyer perspective today. So who establishes tax law? Well, tax law is established by the House of Commons, and it's under the Income Tax Act for income tax and the Excise Tax Act for HST/GST. Now, from that, the Canada Revenue Agency hires lawyers from the Department of Justice that reads the Income Tax Act and the Excise Tax Act, and they themselves establish income tax folios and regulations and policies internal for the CRA that they teach the auditors, they teach the internal appeals officers, and they teach themselves in order to apply the tax law. Now, or their tax policy. Now, the tax law itself is written by the House of Commons. So it's written on a more broad basis that can be interpreted in two ways. It can be interpreted favorable to the taxpayer or favorable to the CRA. When the CRA audits you, a lot of times their income tax folios and their internal documents interpret the Income Tax Act in a way that's favorable to them. But again, there's two ways of framing that favorability. A good example is with a reasonable deduction. There are many tax write-offs that an auditor will come and say, this is an unreasonable deduction. That's an example of framing. They might not appreciate the nuances of your business or otherwise. Another good example is gas mileage and claiming gas mileage receipts. When you claim gas mileage receipts, that's a general deduction for many businesses. However, a CRA auditor would come to you and deny those expenses should you not have a log report. So the CRA would want to see, an auditor would want to see exactly where you traveled, how many kilometers you took, so there you are extremely accurate in deducting from your business income for that year, in deducting the expense from your business income for that year. However, there is no stipulation or provision in the Income Tax Act that says you need a gas log or a mileage log. That's the CRA putting that extra burden in order to ensure compliance. So there are many times where you pull up a Visa card report or a debit card report and it says, in Canada here, we have Petro-Canada or Esso. It'll say Petro-Canada Esso $60. Now, to you, I, and a tax court judge, presumably, that would be very reasonable to deduct off of your income for the year. But a lot of times, an auditor would not see it that way, and an auditor is very strict in their adherence to the policy that the CRA gives them. So again, it's paramount for yourself if you are writing off deductions to yes, write them off, writing off expenses as deductions. Yes, write them off, but be very organized and clear in everything that you're doing. That is paramount.
So Marco, I have a question for you then. So
Yes.
when you go to court and you challenge, let's say a CRA decision, are you
Yes.
challenging it based on the original tax law written?
Well, the original
Like-
tax law written is right here in the Income Tax Act. So the original tax law written is here. Now, that's the law that I'm using. The CRA policy is not law. So at court, nobody ever says, here is a CRA policy. That's not
Okay.
law. The only law is in the Income Tax Act for income tax and the Excise Tax Act for GST, HST. So no matter what the CRA says in their bulletins, that's not a law that a tax court judge would ever look at.
But we would want to be compliant with what says in their bulletin just to make them happy. So we don't have to go to court and argue that point, right?
Precisely. And they have to be fair in their bulletins. They're not unfair. It's just sometimes they're a little bit more strict than the actual Income Tax Act would be.
Okay. So this is interesting because anyone that's, I guess, been around this group or been around me for a long time, I'm a drill sergeant when it comes to record keeping. I mean, I created a course around that, around getting yourself prepared and building your record keeping through the year to prepare yourself for tax season and to be able to put that in a file box and not have to have that be resurrected as years passed, right? So, and I went through that myself, and I told the story in my book where Revenue Canada reassessed me for 3 previous years and just sent me a bill. And I fought them over, I don't know, it was a year and a half, three objection letters. And then finally they agree with me, but it was my record keeping that won the day. I don't think they're expecting a lot of people that have that much detail of record when they
Precisely.
reassess somebody, right?
And that shows you that the Canada Revenue Agency is fair. They do a great job of, being fair to taxpayers, I find, and they are reasonable. With that being said, because you were diligent, because you had great organization, you turn the reassessment around, and that's a great outcome, and that's something that you should impart on everybody here, is to be diligent with your record keeping. Have a monthly check on yourself. Am I being diligent with my record keeping? Am I separating the HST that I collected for the government? Do I have? Am I keeping proper records? Do I have enough money at the end of the year to pay the income tax that I made? All of my deductions that I'm deducting off of my income for the year, do I have receipts for that? If I don't have a receipt, can I point to a Visa card? Do I have a story of why I incurred that expense? All of those things come in handy down the road.
Okay, good. So we've got about, looks like we've got eight viewers watching. If anybody has here a question for Marco, please drop it in the comments. I'm watching it here on the side. So I see we have Tammy Baker watching, Pam, Keith watching.
Yes.
Hey guys.
While you guys think of your questions, let me give some points to recommend somebody if they receive a reassessment letter or being audited by the CRA. Well, if you receive a reassessment letter, you will be audited by you have been audited by the CRA. So you should respond to that. Now, if you receive a reassessment, a notice of reassessment or a notice of assessment, you can object to that in 90 days by filing a notice of objection with the Canada Revenue Agency. And if you do not file within 90 days, you can file within a year. If you miss that year and 90 days, you cannot. It's very, very challenging, nearly very unlikely that you will ever be able to object to that reassessment. So you must be timely with the Canada Revenue Agency when you receive a reassessment. You have 90 days, and if you do not file within 90 days, you have 1 year. After those two limits, it's going to be very tough. So what do you recommend if they do? If you agree with the reassessment, if it's fair, then you move forward. If you do not agree, then you can file a notice of objection. What a notice of objection does is it allows the CRA to assign somebody brand new to your file, and they will have an impartial and transparent look at your file. In addition to that, you can file something called an access to information request or a privacy request, which is available to all Canadian citizens. What this allows us to do is to look into the internal government documents that they have on you. It would be similar to filing a disclosure request in order to find out about in a criminal law context. It's very similar. You have to find out, you can find out about what the Canada Revenue Agency has about yourself. So you'll see all internal notes that they made. You will see the audit working papers, which are the working papers that the auditor used in order to audit you. And those are very helpful in order to understand why you were taxed in the way you were. If there are any penalties, if there's a statute barred report, that is all there as well. And most importantly, sheds light on why you were assessed these taxes, whether they are fair, and whether you agree with them.
It's interesting because I didn't know that. And I didn't do that when I got reassessed. So on that point, I think you kind of said it earlier, but is the tax man really that scary?
The tax man is not that scary. He is fair. However, in Canada, we do have the ability to organize our taxes in a way to pay the least amount of tax. And more Canadians, like Doug says, should take that and should be proactive in their planning and to be ahead of the curve. There are many times where people have life events that bring on these tax problems, but when you approach them before they arise, they're tax opportunities. And that's something that I would encourage is to, when you have a home business, if you do have a business, whether it's home-based or not home-based, to claim the deductions, to take advantage of the small business deduction that the Canadian government offers. What is a small business deduction? Essentially, it's a lower rate of tax if you are a small business, small private corporation in Canada, at a very, very favorable rate of business income tax.
Okay. Another thing that comes up quite a bit, I get from people, again, keeping in the context of home-based business, a lot of us are sole proprietors. We start a business,
Yes.
get it up and running. Some people jump right into incorporation, maybe on the recommendation of a lawyer, an accountant, or somebody like that. There are good reasons for it, and others, when you ask them why do they incorporate, they're like not really sure. So can you give us a little bit on when, why, and maybe, you know what I mean? And
Absolutely.
what that's, if you do go into that incorporation from a sole proprietor, what does that look like from a legal, from a structure, shares, all that kind of stuff?
Absolutely. So we have the opportunity of running a business as a sole proprietor in Canada. And if you are running a business as a sole proprietor and you do have losses, then you can deduct those losses against employment income that you are making. And you cannot do that if you incorporate. So there's a downside of incorporation off the bat. However, if your company is profitable, then yes, it is helpful to incorporate. A couple main reasons. First of all is the liability. So when you are operating as a sole proprietor, you are putting your personal assets liable to any suits against your sole proprietor business. When you incorporate and you are sued, then you are protected through the corporation, so that they do not go through the corporation to your personal assets. If you're sued and judgment is rendered against you, then they can only collect on your corporation. Another benefit is the small business deduction if you incorporate. So your income that you earn through the corporation is taxed at a more favorable rate than if you earn your income personally. And then you can choose how to withdraw your money through the corporation on a tax efficient basis. Generally, you can withdraw your money through the corporation one of two ways: dividend or salary. And you have to choose the optimal mix that's best for you depending on your circumstance. In terms of shares and everything like that, there are various ways that you can structure your corporation depending on your wants, needs, and how many shareholders there are going to be. And additionally, there's more and more tax planning that you can make as your corporation grows and has more retained earnings within the corporation itself. But all in all, to incorporate a company, there are many services available online, and a tax lawyer or a business lawyer can have more sophisticated planning, but only you would know your needs. And it's a good idea to incorporate generally speaking. There is compliance costs. So you're going to have to, if you incorporate an Ontario company, it's going to be a $360 fee to incorporate. And then it's going, if you want a named corporation, it's going to be a $60 fee to search the named corporation. So, and then if you do everything yourself, it's going to be about $400 to $450. And then if you hire a professional, fees range from, $399 on the low end to maybe $2,500 on the high end. And depending on the sophistication and how much time you need and how detailed the share structures are, goes from there.
I'm getting flashes of power. So if you see things flicker in here, we're having an ice storm here in Halifax. So, okay. So what kind of profitability would a business need? Like if we were a home-based business and we heard what you said, like, do I need to be making 100 grand a year, 200 grand a year, 500? Like what is there a sort of a number there?
A profit you should think about incorporating. And
in any profit, or like is there a number like?
Well, I think that if they're generating between 5 and 15,000, at that point you should think about incorporating.
Per year or per month?
Per year, a very low threshold. And again, even if you're a sole proprietor, and you're selling $25,000, $20,000, $30,000 of taxable supplies each year, you have to be very wary about not running afoul of HST GST. So if somebody has an Amazon-based business, or I'm not sure, like just a business that you're providing taxable supplies in Ontario, you have to be careful that you don't run afoul of not charging HST GST. And that comes up very often. And GST HST is a more serious tax than income tax, because
Yeah.
it's trust monies. So it's collectible after 30 days. And when you asked me before, is the tax man scary? He can be, she can be very scary if you do, if you do owe money. They have lots of powers. CRA has the most powers of any government agency. Well, I shouldn't say that, but they have large amount of powers in terms of they can request all of your bank records from all the banks in Canada for, in a very short amount of time. They can put a lien on your properties. They can take money from each check, your old age security, whether you have recurring income. They're very creative. Their collection efforts are very strong. So you have to deal with them prudently and carefully. They can be scary.
If you get on the wrong side of them.
Yes.
Okay. So, Marco, I had another question for you on the liability side of it. I've often heard people talk about what's the term? Piercing the veil. Like,
Yes.
Like, is there situations where I guess you're not completely free and clear of liability, right? So
Yes,
they
generally at a high level. Sorry to cut you off, Doug. If you're not just about piercing the veil, that's the question.
Yeah.
Generally, if you're not committing fraud, you should be okay.
Okay.
You have to be careful that you do not commit fraud in your business.
So what if in a situation we go back to like what you're saying, if you weren't prudent with your HST and these things,
Yes.
could Revenue Canada pierce that veil and come after you personally for that money, or?
Absolutely. That's a great question. That brings me into director's liability. So director's liability is under the Income Tax Act and the Excise Tax Act. Taxes owing, they can assess the directors of that corporation for the taxes earned when they were director of that corporation.
Okay. All right. So we've got Pam asking a question here. I own a rental condos and rent and collect rent, no HST, GST. Should I incorporate? I am now a sole proprietor.
Okay, I'm trying to find that here.
It's in the chat here on the Facebook Live.
Okay. Should she incorporate if she's a sole proprietor?
She's rental condos. She rents out condos.
Yeah. Well, if she does incorporate, then I think the risks are still the same. Right now, unfortunately, she would be liable against a suit for all of her properties should there be a problem, because she is a sole proprietor. And if there was a suit and damages against for somebody against her, they would be able to collect on those assets. And by incorporating, she could protect, each house, depending on, or apartment building, depending on the sophistication. So there are lots of structures that she could make in order to protect the rental income on one hand, and to maximize your protection from liability. So I think that if you sat down with a business lawyer, you found out the exact valuation of each one, how she wanted the income, the rental income to flow through, whether she wanted to, whether she has children in order to estate plan at the same time, when she incorporates, she has a lot more options of estate planning through various means like life insurance, estate planning through various means of, the retained earnings in the corporation. So there are more options, but it gets more expensive, Pam, and it gets more complicated. So that's a personal decision.
And
in terms of a cost perspective,
sorry, Marco, the tax returns get a little more complicated too, right?
Absolutely. There are more compliance costs, accountants, lawyers, and but in terms of a cost, is it cost effective? Perhaps. It depends how you value your liability as well.
Okay, good. Hopefully that answers your question, Pam. What else we got here? We're almost to the end here. So when we talked, we connected there a week or so ago, Marco. We had talked. It was funny because the day I think the day the feds announced the CERB turnaround that the self-employed people, we had talked about it that day. I don't even think we even knew the announcement was out, but what's your take on that? Like, they sent everybody these letters saying that if you didn't qualify, you got to pay it back, $14,000. And then a week or so ago, they said, oh, no, you could keep it. And if you already paid us, we'll give you the money back.
Yeah, my take on that is it's tough for the Canadian government because they tried to respond as fast as they can, fast as they could to a pandemic that they had no idea what was coming, and they really prioritized having all of us Canadians having a livable wage, somebody that could to ensure that somebody could have a roof over their heads, to have food and water, and they did roll out the CERB very fast. Because they rolled it out so fast, they didn't really have too many discussions about, I guess, about who's qualified, whether it's gross versus net income. What about the sole proprietors that are having many expenses and then it brings down their gross income to under the $5,000 level? Those conversations take time, and you have to have examples of things going wrong before you can fix that. So although I don't like to see backtracking, I think that we have to give the Canadian government time, the CRA time, in order to see how do they treat the people that are most vulnerable, that needed the CERB money? Will they come down hard on them? We have to give them a little bit more time. So right now it's in a kind of a state of flux.
Okay.
Yeah.
I think the timing of the letter probably wasn't the best, right before Christmas.
Nobody
right?
likes to be shocked.
Yeah, for sure. All right, cool. Got here Carter's. Is it imperative to get a financial advisor? Why don't you, I'm going to interview a financial advisor on Tuesday in this group, a week from today, but maybe you could, so we've got a tax lawyer, we've got a tax accountant, CPAs, we've got financial advisors. Like, from where I sit is, it's having that bench strength of, like I'm learning just talking to you today, right? So, we always have to be learning and getting advice from different areas. What's your take, I guess, as far as the different aspects of what everyone does and how it can come together? And
absolutely, I think that we live in a great time right now in 2021, where we can share from all of these different perspectives and communicate on a forum like Zoom, where I'm in Innisfil, Ontario, and yourself in Nova Scotia, and we can both communicate and have this wonderful conversation and share with the audience and help out Canadians and Americans alike. I think that's a great thing. In terms of, do I need a financial planner? Do I need a financial accountant? I believe that generally an accountant does do projections as well. An accountant does ensure that the life of your business is viable, and that so it's a personal scenario. There are it depends on yourself, and can your business afford a financial accountant? Is it worth having a financial advisor? Can your bank that you're already paying for do those services? So it's a step-by-step analysis.
Okay, good. All right, so we don't have any other questions here. Marco, I don't want to take up much more of your time here, but maybe you can tell us how to find you, your website, and I'll also post it in the comments here if anybody wants to look you up. The other thing is, before you do that, is Marco's a home-based business. You run your law practice from home, which I think is cool. So everyone I bring into this group from their area of expertise is a home-based business. We're all doing this together, right? So and that's my whole goal with this Facebook community, is to raise it up, raise everybody's strength, empower people, give you the right information. And when you need a guy like Marco, you know where to go. So you can service everybody across Canada, right? In any province.
Yes, for income tax, for HST, GST, for many provinces.
Yeah. Okay, cool. And for our American friends, when I find a cool lawyer like Marco, I'll get him or her on this Facebook group for sure. So again, again, he's a Canadian lawyer, so it's a Canadian conversation, but I'll have a US tax preparer on here next week as well, and a financial planner. And I've got a Canadian CPA here on Thursday. So I'm bringing in lots of different areas. It's your opportunity, every member in this group, to ask questions and learn from each other. So Marco, how can we find you? How can everyone in the group find you?
Thank you, Doug. my name is Marco Iampieri. You can add me on LinkedIn if you'd like. You can find me at taxationcouncil.ca. That's taxation and council with an SEL.ca. And my email is my name, Marco Iampieri at taxationcouncil.ca. And send me an email, contact me through my website. I focus on representing people at audit and appeals and the Tax Court of Canada. And I focus on being cost efficient and saving you more than my fees and relieving your headaches and estate planning as well. So you can reach out to me there. And like I said, the most important thing for yourself is to be organized and to be, to be honest with your tax return. But if you do know people that did have income that didn't declare and have been audited, and it's helpful to have a tax lawyer because of two reasons. First of all, is preparing for court on day one to ensure that your rights are respected and that you are best protected. And the second thing is solicitor-client privilege, in the fact that everything that you say is privileged information, and that the Department of Justice lawyers nor the auditors or the accountants from the CRA can withdraw that information from a lawyer.
Perfect. All right. Well, thank you very much. I appreciate you taking the time to be here.
Thank you,
And,
Doug. I appreciate you setting this up, and it's my pleasure.
All right. Thanks very much. Take care, everyone. Thanks for joining us.